Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Okay, folks, let's kick it off with the price of Bitcoin because today we saw a bit of a pullback. Nothing to worry about here. It's just your run-of-the-mill correction. But as I said in yesterday's podcast, be careful. We could see a fake out here. This could be all a bull trap before we see the actual breakout. I highlighted a chart that shows a Wyckoff accumulation format and that there was in the chart a move downwards before the spring. Now, it doesn't mean that's guaranteed to play out, but we have to be mentally prepared for all these scenarios. I do believe we're going to start to see a strong rally as we head into this month and even into February. The big question is, are we just seeing a relief rally or a move to new all-time highs? Now, one thing I did want to highlight is that with this volatility, we're seeing leverage getting flushed. So today you had over $80 million in crypto longs liquidated. So avoid leverage, guys. That will get you wrecked. The best thing to do is to buy spot, buy when there's blood on the streets and fear, and hold and have a long-term outlook. Now, as it relates to the stock market, the S&P 500 closed at a new all-time high of 6,944. This is a very great sign. We've been talking about we are in a macro bull market for all assets. Precious metals, the stock market, crypto, and much more. And they all have their day in the sun. There's rotation of liquidity from a macro level. So we're seeing right now gold and silver have cooled down a bit. And now we're seeing the stock market starting to move. We got the all-time high close here. Bitcoin starting to move as well. But as always, we got to let the market show us what it wants to do and prove itself that these rallies are actually for real, because markets can fake us out. I do believe that long term, of course, we are going to continue to go higher. I've often stated, as long as central banks are printing money, printing fiat, we will continue to see asset prices rise. That's the foundational thesis of why we're investing. Whether you're investing in crypto, stocks, precious metals, or real estate, it's all getting priced in the additional liquidity and the debasement of currency that's happening over time. We know the Fed has officially gone into quantitative easing, and while they're doing the light version right now of just buying maybe 40 billion in US treasuries, they will continue to ramp up, and so will other central banks around the world. We saw just last month Japan approve the stimulus package, and you're going to see that happening with other central banks. This is all going to drive prices higher regardless of what happens in the short term. Now, in addition, we got the Trump tariffs that are going to be up for review in the Supreme Court, and we should have the rulings by Friday at 10 a.m. Eastern. Now, prediction markets are showing that they're not going to rule in favor of Trump, and we shall see what the impact is on the markets. But if we think about what the impact of the announcement of the tariffs did to the markets, it crashed the markets early in 2025, right? And that's one of the reasons I said that actually changed the whole liquidity cycle. It pushed things back. Plus, you had the extended government shutdown. So if the tariffs are going to be removed per the Supreme Court, then markets may like this, but we're going to have to wait and see, right? I don't know how it's all going to play out. It could be a huge catalyst that sends the markets going bonkers, or, there's some nuance to this ruling, which send the markets down a bit. So I don't know, guys. We're going to have to wait and see, but this could be something that is very good for markets, given that it was a big macro headwind in 2025. Now, folks, this episode is brought to you by VeChain, which is one of the top layer 1 enterprise blockchains out there that is getting huge adoption from enterprises and companies around the globe. These companies are using VeChain to build Web3 technologies. And some of the great features of the VeChain blockchain includes its scalable, secure, fast, and purpose-led. And folks, I'm a VET token holder. I have been since 2018. I'm very bullish on this project. And VeChain, they're working with brands and companies like the UFC, like Walmart and BMW and PwC, Boston Consulting Group, and much more. And just last year, Dana White of the UFC, he bought $1 million in VET tokens. So they're doing some really cool things in Web3 with rewards. And certainly the items that are being built on VeChain are the future of Web3 with rewards programs and much more. So folks, if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Okay, folks, huge news coming out of Wall Street. So, Morgan Stanley files for Bitcoin and Solana ETFs. So, this is huge. This is a Wall Street giant. We are seeing them coming in as a latecomer because most recently Vanguard eventually capitulated after talking crap about Bitcoin and crypto, and they're all going to bend the knee, right? It's inevitable. So, this is game theory playing out here. No one wants to get left behind. So, Morgan Stanley filed a Form S1 on January 6, 2026, seeking approval for a spot Bitcoin exchange traded fund that will hold Bitcoin directly and trade on a US exchange. So they're doing this for Solana as well. So pretty incredible. Very, very bullish. And we're going to see more and more of this. You know, we've heard that Charles Schwab, they're getting ready to launch crypto trading this year. And as mentioned earlier, Vanguard fully capitulated. But what's interesting, in October, and here Nature Racy highlighted this, back in October, Morgan Stanley dropped restrictions on financial advisors recommending crypto ETFs. Now they're launching their own. Nate says makes sense given Morgan's massive distribution. So they have an existing distribution and network. So it's going to be easy for them to push their own product. Nate says clearly they were seeing meaningful demand from clients for crypto ETFs. So there's demand there. They were probably meeting in their boardrooms like, man, we're missing out here. There's demand for these products. BlackRock's killing it. Fidelity is killing it. Franklin Templeton's killing it. Why don't we just launch our own product so that we can capture the fees, right? There's so much demand for these assets. So here you go, folks. Very, very bullish. And Eric Balchunas, senior ETF analyst at Bloomberg, weighed in. He says, I like this move by them. It's smart. They have like $8 trillion in advisory assets, and they already okayed those advisors to allocate. So might as well be in their own branded fund versus paying BlackRock or someone else. Further, they could use Kickstart to their mostly BYOA ETF business. Bring your own assets. I guess that's what that stands for. This could nudge a couple others to launch in-house branded Bitcoin ETFs as well. We'll see. So again, game theory playing out here. No one wants to get left behind. There's no longer the scrutiny or the stigma about crypto. Now it is seen as financially uneducated or irresponsible if you don't have some sort of crypto strategy or offering, right, folks? So we have crossed the chasm here of institutional adoption. And once the crypto market structure bill is passed, folks, you're going to see even more building, expansion, and investments. So get ready for that. Now, speaking of adoption, look at this. Walmart, the retail giant, has launched Bitcoin and Ether trading via their OnePay app, enabling millions of shoppers to convert crypto for everyday retail purchases. So needless to say, this is huge. I mean, the largest retailer, one of the largest retailers, obviously Amazon, I'm sure they're paying attention and watching, right? Like we said earlier, game theory is going to play out. So all these folks are going to get on board. We heard about this OnePay news back in, I think it was Q4 of 2025, and now they've officially launched it. So this is very bullish. Okay, look at this news. Jupiter launches JupUSD stablecoin backed by BlackRock's BUIDL fund. So this is interesting. So Jupiter, a Solana-based DeFi protocol and trading platform, has launched JupUSD, a dollar-pegged stablecoin issued natively on Solana and developed in partnership with Athena Labs. In a X post on Monday, Jupiter said 90% of the stablecoin's reserves will initially be held in USDTB, a licensed stablecoin collateralized by shares of BUIDL, BlackRock's tokenized money market fund. The remaining 10% will be held in USDC as a liquidity buffer with a secondary pool on Meteora. So we're seeing all types of new financial products being launched, more stable coins, and I think innovation, like I said earlier, will flourish and boom as we get more clarity in the market with the market structure bill passing. So this is big. And speaking of the market structure bill, so White House crypto czar David Sachs met with lawmakers this morning to discuss the crypto market structure legislation. So there's a big push to have this done. And even Senator Tim Scott says the Senate Banking Committee will vote on crypto market structure legislation markup next Thursday. So today I interviewed Cody Carbone of the Digital Chamber. That interview should be published by Thursday or so. So he gives the full rundown, all the dates, everything that's happening. And obviously he's in DC, you know, here, ear to the ground. So he has all the latest updates. So you don't want to miss that. And make sure you got the notification bell enabled. So we're seeing some progress here, and it's very early in January. So obviously, there's a whole process of this vote to markup, and all kinds of back and forth. But the point is, the ball is rolling, and this is very bullish. It's also, why I've been stating that I believe we still have new all-time highs to hit for the market, despite some bearish signals on the charts. This is what I put into the macro bucket, along with quantitative easing, more liquidity, and much more, because this is a huge landmark event that I believe will open up more capital to come into the market. Now, I could be wrong. I'm just being open with you guys and transparent and letting you know what I think, but obviously I don't have a crystal ball. So, but I'm going to share my thesis and which scenario I think has the higher probability of playing out. But nevertheless, this is very good, folks. So this is looking good that the Senate is taking action early in 2026 here. Folks, that is the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Please support the podcast by subscribing to my free email newsletter. It is 100% free. Link will be in the description. If you want to expand your knowledge and learn more about crypto and blockchain tech, then check out my course at mycryptocourse.com. And also grab a copy of my book on Amazon. It's available in paperback and digital. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.